Welcome to Investors Insights, where today's topic is now what? Obviously, with the election being over, or it seems to be over, we've done some analysis and want to share that with you today. And so last week, we talked about how historically the market actually performs better when there's divided government. And it looks like for the foreseeable future, that's what we'll have. Then also with divided government, it's fine in relation to the markets, except when there's stuff that needs to be done. And right now, the market is actually looking for some type of stimulus bill. And so we'll be watching that carefully here over the next couple of weeks and see if it can get done before the new inauguration come in January. So again, Trey, you did some great analysis over the weekend of election results. Talk about that and how it relates to the market.
Yeah, definitely. Thanks, Bobby. So I think no one is surprised that there was an election last week. But what may surprise people is what happened down ballot. And that's really important. Now, everyone is aware of the president at the top of the ticket, but there was a lot of initiatives that have market impact down ballot. And that's really in states and where things are legal or illegal and how it impacts publicly traded companies. So, for example, California passed a bill that allows for app-based drivers to not be considered employees, but they're considered independent contractors. That's very important because an employee would come with all the benefits of being an employee, which would make the app or the gig economy unworkable if people had to have the cost involved of having a full-time employee being an app worker. So that was a big bill for technology companies out in the West Coast. In addition, Arizona, Montana, New Jersey, and South Dakota all legalized the recreational use of marijuana. That's something we've seen starting to expand over the last few years, that there's certain public companies that have exposure there that we may see a growth industry. Tennessee, Maryland, Louisiana, and South Dakota also legalized sports betting. That's another trend we've seen where legalization has expanded across the country, and we're seeing companies shoot up that came out of nowhere that are really growing in market cap and growing exposure. So this is where the consumer and deregulation down ballot really may have a positive impact on the market that really didn't have anything to do with the presidential race, but I think a lot of people have glossed over that and may have missed that point. And so there's a lot of races still to be called, but there's still a lot of action happening that we're looking at as down ballot where it may work for the next 4, 10, 20 years possibly.
Yeah, and we also know that historically when the White House changes hands, 12 months following that happening, the market is usually up. No guarantees, of course. The market is usually up, but we know it's going to be more volatile. So, Ashley, we've been focused on so much on the election, but talk about the economic numbers coming out the past 2-3 weeks. They're really important about the future.
Glad to do it, Bobby. There are two really that are kind of bookended that are interesting to see. One is right off the bat, when the month turned over at the end of October, we had another 1% drop in the unemployment rate. At the end of September, we were sitting at 7.9%. Now we're down to 6.9%, and that's a good move, of course. We're still grinding it out and making progress. One thing we'll warn you about a little bit, though, is that the long-term unemployment within that figure, and long-term unemployment is defined as being unemployed 6 months or more, that's really starting to spike up. And that's probably a lot of the reason that you're seeing Federal Reserve Chairman Powell sort of, from a policy point of view, call for another stimulus. Obviously, labor economists and the Fed knows when you get 6 months out, that really starts to get problematic for people. So probably a lot of the dialogue you're seeing from him is try to cut that off before that starts to be really a more systemic problem. That's first. The second thing is on the earnings side, Bobby, as you know, almost all earnings are in now from this latest earnings season. And from a COVID impact point of view, analysts had thought initially that the drop in earnings across the board, regardless of company on average, would be a drop of about 21% from this time last year. It wasn't nearly that bad. It was a drop of about 7.5%. So even though the earnings were down, they came in much, much better than analysts had predicted a few months ago. So both are good trends overall.
Yeah, and I think we'll see the economic numbers and economic news become headline news now that the election is past us. So that's great information, Ashley. And then, Adam, we got great news this morning on the vaccine. Obviously, the market is reacting positively to that. But talk about technicals and talk about, more importantly, the momentum we've seen going into the election in the past week.
Yeah, appreciate it, Bobby. And like you said, we had a Friday close on the S&P 500 of 3509, pushing our new resistance level to 3590 and our new support level to 3430. The reason this is important is this could possibly indicate a more bullish tone in the markets. And like you said, momentum surging. And historically, trends leading into the election tend to hold past the election. And one of the trends that we're seeing, going back to Ashley's point, is consumer sentiment. So we're getting to see a lot of good earnings coming in. Also with the vaccine, will this consumer sentiment hold through the remainder of the year?
Yeah, that's important. Momentum is everything right now. So, but thank you for watching. If you have any questions about all the analysis we're doing, please call us. Things will never be dull. So thank you for watching and have a great week. Thanks.